today's podcast.
I'm the host of today's podcast.
We are going to take a deep dive into Chainlink, a technology that's been getting a lot of attention in the cryptocurrency space. What exactly is it? Why is it important? Should traditional finance be worried? Today we have three guests. First, Chainlink supporter, a staunch advocate of decentralized technology. And second, traditional finance practitioner, a veteran with many years of experience in the banking industry who is curious about the practical application of blockchain technology. And last, financial regulator, a policy expert who focuses on legal compliance and consumer protection. Please say hello to the audience.
I'm Belly.
Hello everyone, I'm May. As a traditional financial practitioner, I hope to bring you some different perspectives.
Hi everyone, I'm Julie from FinTech Regulation, and I'm very happy to be here to discuss this topic with all of you.
Okay, today we will start with an introduction to Chainlink. First, please let Bailey introduce us to the background, history, and core functions of Chainlink.
A supporter of Chainlink, and I'm excited to share my thoughts with you today. Okay, Chainlink is a decentralized network of processing machines that was born in 2017 with the initial goal of solving the problem of connecting smart contracts to data from the outside world. Its role is to connect smart contracts with real-world data. Think of it as a trust-free data transmission chain that gives blockchain systems access to real-world information, such as financial data, weather information, and even sporting event results. Without processing machines like Chainlink, smart contracts would be blind, unable to access external information. Chainlink provides external data to the blockchain through a decentralized network of nodes. The data includes not only real-time prices in financial markets, but also information on everything from weather to sports performance. In short, Chainlink lets smart contracts know that what's going on in the outside world. At present, it has been widely used in the decentralized finance field, such as price prediction machines, insurance claim settlement, and even sports guessing.
This may sound appealing, but as a financial professional who has worked in the banking industry for many years, the main issue I see is the reliability of data. Traditional finance relies on regulated data providers, credit rating agencies, and IDOT firms to ensure the accuracy and the transparency of data. And the Chainlink's decentralized model sounds like a data-free market. So who guarantees the accuracy of the data? If I were a hedge fund manager, why should I trust a group of anonymous node operators instead of Bloomberg or Reuters?
Oh yeah, this is the advantage of decentralization. Unlike a centralized organization like Bloomberg, Chainlink sources its data from multiple independent data providers, aggregating multiple data points to ensure accuracy and censorship resistance. Do you remember the LIBOR rate region scandal? At the time, banks around the world conspired to manipulate interest rate, affecting trillions of dollars of financial products. But in the decentralized network, there's no single institution to control the data. This avoids similar problems.
But what if wrong data causes big losses? Who will take responsibility? In traditional finance, banks are regulated, customers have legal protection, and deposits are insured. But in a decentralized system like Chainlink, if a node gives wrong data and the user loses their assets, who will pay for the loss? And right now, there is no clear answer, so that's a big problem.
This is an interesting question. Let's look at a real-life example. In 2020, Chainlink's price oracle successfully prevented a flash loan attack because it discovered price anomalies in the DeFi market, thus avoiding large-scale capital losses. However, there have been cases where large-scale liquidations occurred on DeFi platforms when the oracle provided incorrect data. As for the regulatory issues regarding Chainlink, let's discuss them later. Betty, what do you think are the different characteristics of Chainlink from other cryptocurrencies or blockchain projects?
For me, I think the biggest difference is that Chainlink is not a pure cryptocurrency, but a network that provides data services. For example, while Bitcoin and Ethereum primarily address decentralized payments and smart contract execution, Chainlink's core mission is to provide real-world data for these smart contracts. It can be combined with applications in traditional financial fields, such as various types of finance, insurance, and cross-border payments to provide very important support. Chainlink is derived from other cryptocurrencies and has some unique regulatory advantages, many in its core function. The role of a decentralized front-end machine rather than a payment currency or smart contract platform. Chainlink's Link token is not primarily used to pay or store value, but to reward nodes that provide data off the chain. As a result, it's not easily classified by local regulators as an unregistered security or an illegal payment instrument like Bitcoin or Ripple.
This is an interesting point, and Chainlink does have its own unique advantages. However, do these advantages help Chainlink play a better role in the entire FinTech ecosystem? We will explore Chainlink's position in the FinTech ecosystem later. Chainlink plays an important role in both decentralized finance and traditional finance. Bailey, can you give some specific examples of how Chainlink works with DeFi platforms?
Sure. DeFi platform IVE, for example, uses Chainlink's Oracle data to get real-time market prices. If IVE doesn't have accurate data from Chainlink, it cannot access the true value of the borrowed assets and therefore cannot conduct effective risk management. In addition, DeFi platforms like Synthetics relies on Chainlink to provide real-time prices data for major assets around the world. Without this data support, smart contracts cannot be executed correctly.
It sounds very important. So, May, what benefits do you think traditional financial institutions will gain from introducing Chainlink, for example, in areas such as cross-border payments?
Yes, Chainlink has a significant impact on cross-border payments in the traditional financial sector. Taking Swift Gap as an example, Swift hopes to improve the efficiency of cross-border payments through blockchain technology. Through Chainlink's real-time currency exchange rates and market data, Swift can reduce reliance on traditional bank intermediaries, thereby lowering the cost and time of cross-border payments. Moreover, such cooperation also helps to enhance the transparency and compliance of traditional financial institutions. Traditional finance relies on centralized institutions such as banks and stock exchanges to process transactions and data, while Chainlink's decentralized Oracle can automatically obtain and verify financial data such as interest rates, exchange rates, and stock prices, etc. By using it, traditional finance can improve its own business efficiency and automation capability, as well as enhance cross-border services.
But for regulators, decentralized platforms bring a big challenge in transparency and tracking. Traditional systems rely on centralized data control, making it easier to monitor. But in a decentralized network, data moves in a more complex way. So we need to find a way to efficiently track both data and money flow in this new system, and at the meantime, still allowing innovation to grow.
We will discuss this in more detail later. In this section, everyone mentioned the role of Chainlink in DeFi and traditional finance. However, everything has two sides, so we will talk about the risks faced by Chainlink. The data streams provided by Chainlink are critical to DeFi and financial applications, but it also faces some risks that cannot be ignored. Julia, can you tell us about Chainlink's potential risks in terms of consumer protection?
Sure, since Chainlink is a decentralized network, its data sources can be attacked. Hacker might target certain nodes to change the data. It could make smart contracts work incorrectly and harm users. For example, in 2019, the BZX platform was hacked several times because of Oracle issues and causing users to lose some money. This case reminds us to be very careful when using decentralized error codes.
Indeed, this question is very important. To address the risk, Chainlink has taken several steps. For example, its network of nodes is distributed, and incentives are used to ensure that nodes provide real and reliable data. Chainlink also works with decentralized insurance platforms, such as Nexus Mutual, to provide comprehensive protection for users who have suffered losses.
This is indeed an effective risk control measure. Well, in addition to consumer protection, privacy and security is also a hot topic. May, what do you think of Chainlink's challenges in privacy protection?
Chainlink does face privacy and security challenges when dealing with sensitive data. Although Chainlink itself is decentralized, ensuring that the data is not linked, tampered with, or abused during the data transmission process remains a major issue. For example, in financial transactions, private data such as account balances and transaction details may cause significant losses to users if leaked. To this end, Chainlink is exploring the integration of secure multi-party computation technology to enhance data privacy.
This provides us with a very important perspective. Finally, we also need to discuss the risk of illicit market activities. Bailey, can you give some practical examples of how Chainlink could be abused?
Okay, one possible risk is that decentralized privacy machines could be used to launder money or fund illegal activities. For example, some malicious users may manipulate Chainlink's data streams to facilitate the flows of illicit funds, while the decentralization itself provides greater transparency. Malicious users can still exploit these vulnerabilities to conduct illicit transactions, so regulators and platforms need to be on high alert.
This is also a serious problem because technological innovation always requires regulatory advancement. We will discuss the challenges facing regulation in detail later. With the rise of decentralized finance, regulators face a number of challenges when dealing with technologies like Chainlink. Julia, can you tell us what the biggest issues regulators face when dealing with decentralized technology?
From my perspective, the biggest challenge is the regulatory gap. In traditional finance, there are well-established rules for managing banks, securities, and insurance, but with decentralized technology, these rules don't always apply. For example, Chainlink acts as a decentralized data provider, but how can we track and verify its data sources? That's a big problem. And many decentralized operations don't fit into existing regulations, so we need new legal frameworks to handle this technology. And also, the financial industry follows strict compliance standards like ISO-X audits and KYC, Know Your Customer requirements. So, if Chainlink wants to become part of mainstream finance, it must meet these standards and ensure that its data providers are legally accountable.
Yes, I agree with you. This gap does exist, especially in the field of cross-border payments. Different countries have varying regulatory standards for cryptocurrency and blockchain technology, making it difficult for traditional financial institutions to operate in compliance globally. If the regulatory standards are not unified, it will affect the healthy development of the entire industry. If Chainlink established a strict framework, traditional institutions may have security and be more willing to use Chainlink.
But what is the point of decentralization if we impose these rules of traditional finance on decentralized systems? A core advantage of DeFi is that it eliminates intermediaries and increases efficiency. If we require all Chainlink nodes to be KYC compliant with financial regulations, it will become just another centralized financial system and lose its original value.
Well, I think the key here is to find the right balance. The collapse of the FTX exchange has already shown how dangerous an industry can be without regulation. So we are not trying to kill innovation, but we do need some reasonable rules. For example, we could build a decentralized reputation system or add node staking with insurance. This would give users more security when using Chainlink's data. And regulation doesn't have to be a restriction. It can actually help more institutions feel safe when using decentralized technology.
Yeah, you have got the point there. And Chainlink has its advantages. In a decentralized ecosystem, every transaction and data are open and transparent. And in theory, regulators can track and monitor these transactions in real time through tools such as blockchain browsers. By increasing data transparency, regulators can regulate more effectively.
This is very inspiring. Finally, what are your prospects for the future development of Chainlink?
Well, I think as the technology continues to evolve, Chainlink will be used in more areas, not just in finance, but possibly in other industries such as insurance, supply chain management, etc.
For regulation, in the future, we need to make sure that we will not only support innovation, but also keep data safe and protect the rights of the users. That's the only way for the industry to grow in a healthy way.
I look forward to seeing the deep integration on decentralized technology and traditional finance, and in the future we may see more cross-border cooperation.
Thank you all for your wonderful insights. Today we learned about the development of Chainlink, discussed Chainlink's position in the FinTech ecosystem, the risks it faces, and the challenges faced by regulators. I hope everyone has a deeper understanding of this topic. If you have any questions or ideas, please leave a message in the comment section. See you next time!